So here we have two similar structure breakouts, one on euro-dollar pair and one on dollar-yen. But for some reason on euro-dollar, after the breakout, the market retested the broken structure and then the market dropped sharply, forgetting about that key level. In contrast, here on dollar-yen, after the breakout, the price retested the broken structure and from that we saw a very strong bullish continuation. The point is that the breakouts are different. Some are valid, but some are not. In this video, I will teach you what breakouts you should avoid. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. We are on Euro New Zealand chart, a daily time frame, and here we see a very important horizontal structure resistance that the market is currently breaking. Of course, in order to confirm the breakout, we strictly need a daily candle close above, but that is not the only condition that we are looking for. When you are planning a breakout trade, you should always look left at structure and analyze the closest strong key levels that you see. Looking left at structure, we can see that our closest next resistance is right here. So if the price breaks and closes above the current structure, we can easily expect a bullish movement all the way up to that structure because it is the closest strong resistance that we see. Now take a look at that structure here on pound-yen pair. We are on a daily time frame and we see a very strong horizontal structure resistance right here. If the price breaks and closes above that structure, of course, it will confirm the breakout. But will we trade that breakout? Let's look left at structure. Looking left at structure, you can see that over here, we have a very important structure cluster. It is a very strong resistance that was a very strong support in the past. And if the price breaks and closes our current resistance, then the next goal for buyers will be that structure. And of course, the potential for growth will be very limited, so such a breakout we won't trade. Will we trade that breakout on Swiss yen? You can see that here we have a very strong resistance and the market closed above that structure. Now we see the retest. The fact is that again, looking left over here, we have again a very important structure shelf. And even though the market violated the current resistance to the upside, it immediately faced that resistance from where we see a strong bearish reaction. So again, that is the breakout that we should avoid. In comparison to the previous example, take a look at that breakout here on dollar index. You can see that the price successfully violated that structural resistance and our next strong resistance is over here. So the growth potential for dollar index is enormous. The market will most likely reach that resistance next, and definitely such a breakout we can trade. And now let me share with you a very important tip. So here on US 30 we have a very strong horizontal structure support that the market is currently testing. Of course, if the price breaks and closes below that, we won't short the market because just a little bit below that we have this major rising trend line that is a very strong support. But what you can look for right here, you can look for a double breakout. You can look for a breakout of the trend line and of that horizontal structure. That will give you a very strong bearish signal. And then you can short expecting a bearish movement to the next strong structure. Your next strong structure will be over here, so you can catch a very nice short. Following these simple techniques, you will be able to catch winners like that, and you will be able to avoid losses and false breakouts. For more education, for more tips traders, don't forget to check my premium educational group, the link in the description below. Also, if you have any questions, let me know in the comment section, I always reply. Also traders, please like this video, subscribe to my YouTube channel, and I will see you next week. Thank you so much for watching.